Good afternoon and welcome to the Blue Line Metals Edge here for Tuesday, November 30th. I'm Phillip, Streible, Chief Market Strategist at Blue Line Futures. A lot of action in the markets here today. Very little places to hide, and depending on which way you were positioned, you had a lot of volatility and it seemed like a lot of people were getting whipsawed. So looking at the markets here today and getting right into it, two big stories came out, and that's what really affected the markets. And they were brought to you by the Financial Times and then also Jerome Powell. So digging into it here this morning, if you look at the markets, and this is going to go to flip to a daily chart, you could see that going to bed last night, traders and investors really thought they were all in the clear. You had Biden come out and say, get the booster, you'll be fine. You had Fauci come out and say, there'll be no new lockdowns. So you get stocks up, you get oil recovering, you got the NASDAQ punching out, making a new high, looking like it's going to extend on and move on up and threaten the all-time high. You got the S&P 500 doing a great job too, recovering much of those losses. It was really weighed in by the give up in the energy sector towards the end of the day. That's what threw in the towel and didn't cause the S&P to make new highs. Same thing with the Russell. And the big thought process is OPEC has two decisions. How do they handle this? Do they come out and they cut production, or do they maintain their current production? So I was leaning, and most of the analysts, you look at like JP Morgan, Goldman Sachs, things like that, they believe that OPEC will cut some production and they'll be cautious, they'll be slow to start as far as increasing production. That's how you have these calls for $125 and $150 crude oil in 2022 and 2023. And they're also maintaining their year-end targets that are $80 to $85 on crude oil. So all that makes sense. The problem is that you come into today and last night, you get this Moderna chief predicts existing vaccines will struggle with the new COVID. So you see Moderna down 5%. Markets completely freaked out. Equities are selling off. When I woke up at 4 in the morning, I looked at my phone to check the markets. I was really surprised. I thought we'd be up 400, not down 400. So his statement was the vaccine is less effective against the variant. So that's what they're anticipating. Stocks down, oil down again, but limited because of the fact that OPEC, they might not increase that production. You get gold up, silver up, and the thought process is the Fed. They think that the Fed is going to be dovish on this. And I snapped a photo of some of the commentary from Powell where he issues warning in his testimony. He says that this is posing risks. There's increased uncertainty. He could reduce. He would slow. These are all cautious things. That tells you it's a dovish Fed. So going back to the charts, you pull up something like the gold market and you look at that 10-minute chart. Here we are. We're coming in and we are coming right on up. Let me go to a daily chart or the 10-minute chart because this really breaks down this picture. Bam, we're elevated on this news of the vaccine not doing its job. You get the dovish Fed, flight to safety. You get silver doing its job. It's outperforming the gold market right here, and it looked like it was off to the races. I was really thinking that I might have missed the boat on buying some gold and some silver. Well, the problem is that you get Jerome Powell, he comes out and he completely flips the script. He comes out and he says, basically, this is how I'm interpreting it. He's got too much political pressure with inflation. He removes the word transitory. That's no longer a thing. Now inflation is a serious threat. So he's getting grilled by politicians left and right. He's already been reappointed. Now he can kind of do whatever he wants. So fine, you don't want any more inflation? What I'm going to do is I'm going to quickly taper. I'm going to aggressively taper. So that takes your dollar index, brings that straight on up. Let's go right here. Dollar index, bam, straight up. Of course, gold hates that. Gold sells off right down here. Going in the background, since you got no word out of OPEC, you're just seeing this trickle and this snowball effect of crude oil, and it seems to be getting worse. So there's a lot of different things that could change the whole direction and change the narrative throughout the week. One, again, OPEC, do they cut production? Do they keep production the same? Two, the jobs data. If the jobs data comes out better, they're going to reaffirm that hawkish stance. If it is weaker, you could start to see things change. You could start to see the jobs recovery, which I believe people are waiting the next year to get a job. And then the biggest thing is the vaccine. If you get one of the other drug manufacturer like Pfizer or Johnson & Johnson's been written off, but you get somebody else and they analyze this and they say, no, our product fights this well. This isn't as big of a deal. You're going to see equities rip. You'll see crude oil have some kind of comeback. It's not going to go back up to those highs because they're still going to have to wait on OPEC. So a lot of things going on out there today. A lot of whipsaw. Pare back some of your positions. Even if you have to take some losses, if you're overweighted in different areas, different sectors, kind of peel back some of the onions here, get smaller. I do like gold long term because I know that we are going to have a slowdown, and if you taper aggressively in a slowdown, you tend to create a crash on risk assets. And I think that's part of the reason what the market was interpreting, where you had that 600-700 point sell-off in the Dow. So you get the crash, you get the deflation, people go to the placeholder, they'll be buying like probably Bitcoin, they'll probably be buying the gold, silver will probably rip higher, and then for equities, the one you want to be long is going to be the NASDAQ, and you'll want to stay away from the Russell because the Russell has got too much exposure to financials and it'll have too much exposure to energy. So that's the way that I'm playing it. That's the way I interpret it. If you have any questions, give us a call, 312-858-7303. Remember that futures and options trading involves risk loss, may not be suitable to all investors. Good luck, good trading.